So Barron's is reporting this morning that there is no news to report that would be causing Tesla to go down this morning, except possibly profit taking. So after a really good week, there could be people that would be trimming. Now, I could make a really strong argument that that's not wise, that there's plenty of upside left in this month, much less next month and in the future. But that's how the market sometimes works. Now, on the other side of the coin, it could be that Tesla was leading the way on in the directionality of the market this morning, because the jobs numbers were not great, and continue to show that the economy may be a lot worse than most people are saying. And yet the market, the Dow, was kind of strongly up earlier this morning, but now is turning down along with the NASDAQ and the S&P. So it could be maybe that Tesla was just leading the way and got out in front of where the rest of the market was going to go. This morning, there just seemed to be a lot of confusion about what to do about the jobs number. Now, when I say that, it's kind of like it's like turning the stock market into a human and thinking about it as one entity, thinking, oh, this is, what are we going to do about, but there's obviously millions and millions. It's the crowd out there voting about what to do. And this morning, it would be easy to be confused because we're back in that good news, bad news, situation. The job numbers were really bad news in every way, shape, and form. We'll talk about those in a minute. And yet the market was scrambling in various different directions. I mean, even the bond, the 10-year and the 2-year fight that continues to go on over the reinversion, that was up, down, in the early going. So the last couple of minutes, as I checked it out, things seem to be settling down into more of a pattern that I would expect. The economy is in trouble. And the Fed cut, yes, I think the 25 basis points is in, but not the 50 based on today. But we've got 10 more days for the Fed to think about it. All right. Let's take a look here. Many in our Tesla world right now would spend they spend so much time talking about the competition. You may know this about me as somebody who's been selling products in business for myself for 50 something years. I rarely pay any attention to the competition. And I think it's a waste of time, even for the management, the strategists within Tesla, to think much about the competition. And I know this is how Elon thinks as well. You concentrate on your product. You make your product as good as it can possibly be. You're always trying to make changes and make it better and better and better, try to get the cost down, try to find new markets, try to find new ways to distribute the product. Make it, I like to say, black, white, upside down, right, left, whatever you can, bigger, smaller. What can we do to the product to make it more interesting, to make it have a greater unique selling proposition? Well, if it's dumb for the strategist to be thinking about the competition. Now there is one exception, and that is as the competition comes up with new ideas and new looks and new designs and new ideas, and new stuff, you want to take a look at that and you go, okay, that makes sense. That doesn't make sense. Okay, yeah, maybe we want to incorporate something like that. Yeah, you're going to do all of that, but you're not spending a lot of time thinking about the details of the competition. Now, if this is true for the strategists and the company themselves, then it's even more so true for the investor. And if it's true for most companies, it's especially true for disruptors. You see, the real competition, let's say, for instance, cars. Well, we could talk about this in terms of energy or any of these other things, but the real competition for cars is not the other EVs. It's ICE. It's ICE. It's the internal combustion engine cars. Looking at the new BEVs as they are released might be instructive, for these new ideas and stuff. There might be powerful, unique selling propositions in those cars that you might want to take a look at. But the TAM, the total addressable market for the BEV market, assuming Tesla continues to make compelling products at compelling prices, is huge. BEVs right now are less than 20% of the overall market. So as the prices come down and the value proposition becomes more obvious, that percentage of BEVs is just going to continue to increase, and Tesla will get their share. Now, if you turn more to the hot topic of the day, robotaxi, the TAM is even more massive. It's multiple times what the car market is. To focus on the competitors at this point, it just makes no sense. Tesla has 6+ million vehicles fully equipped and ready to step out as robotaxis right now. And over the 12 months, we'll add another couple of million, 2.5 or more million cars out there ready to be robotaxis. No other company is making a robotaxi specific vehicle like Tesla is getting ready to make, that's designed around the autonomous use and providing a completely new way to experience private transport. When robotaxis are launched, the competition will be private car ownership and use, not Waymo. It might be Uber and Lyft a little bit, but quite frankly, they're toast. That's just my opinion. From AJ this morning, he says a lot of EVs stocks are up materially yesterday, the day before. This suggests that Tesla's performance today was at least partially driven by a broader technical reaction and to a lesser extent by the various recent positive news like FSD, global expansion, FSD version 13, Elon Trump announcements, et cetera, et cetera. Or AJ, who I always agree with, or almost always, it could be that these other EV stocks are following Tesla. Did you ever think about that? All right, then Dylan Loomis has this morning, says after years of intense research, he's created the ultimate cheat code for investing in Tesla. Number one, press X or whatever, I can't make out what it was here. Listen to Elon, but ignore his timelines. Right stick left, buy Tesla. Press triangle, listen to Andrej Karpathy on repeat, at 2 to 3 times speed. And then right stick left, buy Tesla. Press R2, listen to Ron Barron on 1.5 speed, right stick left, buy Tesla. And then spam the circle, I don't know what that even means. He says, ignore all MSM and most analysts, and then right stick left, buy Tesla. Then press and hold the D-pad up, wait long enough, and then you'll have your result. All right, this is Randy Kirk, by the way. Hit subscribe, hit notify, you know what to do. But there's always new people that I have to explain this to. Hit the notify. Why do you hit the notify? You hit notify because later today, of course, we're going to have Cern Basher. And Cern Basher has some amazing, as always, the slides. He's going to do stuff on the economy. He's going to, almost all of it, I think 100% of it this time, is about Tesla, about, various aspects. I can't remember what it was, but believe me, it was, if anything, slightly even better than yesterday's. And yesterday's was incredible. And we'll put a card up for that later. All right. And then, of course, we got Larry Goldberg later tonight. And then tomorrow morning, you know what it is. It's Employment Friday. So Cathie Wood will be doing her deal tonight or tomorrow morning. Larry and I will look at it as soon as it comes out. We'll watch the entire thing. We will dissect it and improve upon it in our own minds. And then we will talk about that and tomorrow morning at some point. So that's why you hit notify. And then, of course, you want to think about participating in Patreon. Information down below. Just click on it and you can do that. Okay, when it comes to employment numbers, we really need to start from what matters, and it isn't the headline number. It's the revisions, because the revisions are massive again. So here we go. The change in total non-farm payroll employment for June was revised down by 61,000. 61,000. From 179,000 to 118,000. That I think I actually made a mistake earlier today. I think I thought that was 41,000. Anyway, in an X post that I made. I might have to go back and change that. Anyway, revised down by 61,000. From 171,000, revised down by 1/3 to 118,000. And the change for July was revised down by 25,000 from 114,000. Okay, we're talking about another third, right? 20%. Revised down to 89,000. So last month's number, if it had been put up honestly, would have only been 89,000. And that gets another revision. Next month, it might have been 0. But these headline numbers keep coming out massively higher than what they really are. So why do we believe the headline number at all? In August, average hourly earnings for all employees on private non-farm payrolls increased by 14 cents or 0.4%. That's 5% per year to 35.21. And then average hourly earnings increased by 3.8%. That would be not the annualized rate, but the actual 12-month rate. So either 3.8 or 4.8, you take your pick. Either way, it's way more than the Fed wants it to be and is definitely inflationary. That would have to be worrisome to the Fed as they're trying to make a decision 2 weeks from now. So, all right, let's now go to that headline number. Total non-farm payroll employment increased by 142,000 in August, which is down from the 165 revised hope-for number that the street wanted, which was revised down, I think, from 180 something. 142,000 is a massive miss. But if we take away that 86,000 above, you're only talking about 60,000. Now, I'm not going to take it away twice, but the reality is that the number that came out today is just bogus. You just can't even accept it as anything like reality. So maybe that number is going to come down next month to 80,000 or something again. Well, here's the number that I trust. This is the number I trust the most, okay? The household survey came in at 4.2%, which is what the street expected exactly on the nose. And it confirms that we're in this range now. Last month it was 4.3. The month before, I think it was 4.1. So 4.1, 4.3, 4.2. So, 4.2 seems to be where we are, which is not a horrible number, by the way. That's not a terrible number. This is, 3.5 is full employment. So 4.5 is a lot more. 4.2 is a lot more, but it's not saying that, we're in real big trouble yet, but it's an indication the directionality is not good. So that's 3 data points, 3 in a row. Let's call it 4.2 average for the last 3 months. No increase, no significant increase. No, it's not getting worse and worse. However, as you know from the other data we saw earlier this week, the JOLTS numbers, the jobs, the quits numbers, the layoff numbers, all that stuff is indicating nobody's hiring, okay? Now, you could argue that the Fed could look at this and say, we don't need to drop rates. We're good. And they'd be worried about those wage numbers. And so they shouldn't maybe drop those rates. However, given the Beige Book and other stats that we've been talking about this week and last week, I think we're going to get the cut. There's a modest possibility that the CPI comes in next week way too hot, but I don't expect that. Moreover, I don't think today's report kills, but I do think today's report kills any chance of a 50 base cut, unless there is some very horrible news in the next 10 days, because there's a whole bunch of reporting that comes out next week, and even on Monday and Tuesday and Wednesday of the following week. So this is from 𝐒𝐚𝐿𝐥 PhD. He goes under the name Real 𝐒𝐥 Antoni on X. And he puts another, additional negative on this jobs numbers. I can never find this report. I gotta ask 𝐒𝐥, where in the heck is this report? All 100% of the net job, more than 100% of the net job growth in August, again, this happens every month, it seems like, was part-time employment. 527,000 increase in part-time, and full-time jobs plummeted 438. All right. 527,000 part-time jobs, 438,000 go away on full-time, meaning that every single one and more of that increase was from part-time jobs. Well, not and more. I'm sorry. This is incorrect. He's incorrect. I got to do the math here. So we got about 90,000 part-time jobs positive out of the 130-something thousand. Okay, 140-something thousand. So, but large percentage were full-time versus part-time. Hey, 𝐒𝐥, how did you get that wrong? I always respect your numbers. There was a problem here. All right. So, but the situation is still dire. I don't like anything about the jobs report except for that fact that we now have 3 months in a row pretty well confirming that we're sitting around 4.2% in terms of employment. All right, let's take a look at where the markets are now. We've got the Dow continuing to move towards the red, but still up at 4180. We've got the NASDAQ solidly in the red, but now leveling off at negative 100, up at negative. Wait a minute. I've never seen that happen before. Boy, for some reason my app lagged there. Okay, this is more what I would have expected from the get-go this morning. You've got the Dow down 120, you've got the NASDAQ down 228, 229, you've got S&P down 44, and now this is not what I would expect, but you got Tesla down 896. You've got all the Magnificent Seven down strongly. NVIDIA, for instance, 3. Microsoft 241, Meta 343, etc. And you've got the Cathie Woods basically all down or very close to being down. This is what I would expect from that jobs report. Now, on the one hand, it does confirm the Fed's likely to cut. On the other hand, it is not. It is showing that the economy, I'm telling you, June 1, people stopped spending. That was it. It was the end of spending. It happens quickly. I'm joking, of course. Every single consumer in the country didn't go on June 1. I can't afford to go to McDonald's anymore. But it's kind of almost feels like that in the business community. It feels like one day everybody's doing fine and the next day everybody stops buying. And that's what I think happened in June. I think we're continuing to see that. I think we're in recession. The market this morning is finally saying, you know what? We've had a bad week. We're going to have another bad day. Tesla down 869 at this point tells me that this is more than just a trim, but it has nothing to do with, again, Tesla news. This is saying, oh, okay, well, if the economy is in trouble, Tesla's going to feel it too. All right. I don't think that, because I think one of the things about recessions that's very, very cool is that if you've got a new product or a new concept or a new thing that you introduce during a recession, you can get a bang up year out of a recession when everybody else is having a horrible time. And with FSD coming along, I think Tesla is going to end up with a bang up, much better than expected year. All right, so that's where we are right now. Let's go ahead. Oh, the percentages? Yeah, of course. I heard you. Dow is down 0.35, NASDAQ down 1.34, S&P down 0.84, and Tesla down 3.89, just about on the nose for the beta on NASDAQ. Or the delta. I can never remember which it is. Would somebody help me down in the comments below? Is it the beta or the delta when you're talking about the normal difference in terms of percentages that the Tesla would be down compared to the NASDAQ, which is 2 to 3 usually. All right, let's go ahead and look at the bonds, which that has been flip-flopping back and forth between the new reality, which should be showing which is right now is, okay. So we've got the 10-year down 3.3 basis points at 3.70. That's pretty interesting. And we've got the 2-year down 5.8 basis points at 3.694. So that is, again, 0.6 of a basis point now lower than the 10-year, which is a 3.70. So 0.6 of a basis point reinverted. And all morning long, it's been doing this and then this and then this and then this, back and forth, back and forth. But I think that we're going to reinvert and this will start to spread out. Okay. In the meantime, the 2-month is up, of course. I can't deal with it. Oil up 0.44 at 69.61. So that's 0.67%. The Brent is up about the same, a little bit less, $73.04. Natural gas up 1.15%. So doing very well in this situation. Don't have a specific reason for that. Gold down a tad, 2,538 down 420 this morning. Silver down also 0.39, 0.41 just changed. $28.98. Copper down 0.65 at $4.11. The dollar down against both the Japanese yen and the euro, a little bit more against the yen, 0.57 down against the euro, 0.22. There you have the Bitcoin down more. Okay, this thing is crashing now. I think this is below recent lows. I'm a 99% sure. 1,277 down this morning, 54,813. Okay, so going back and taking one last look At Tesla, it is now down. Oh, man. Things have crunched down further, including Tesla now down $9.63. Yeah, so things are kind of, and you look across the board at all the various Magnificent Seven, all of them also not yeah, pretty bad last few minutes. $9.62 right now for Tesla. Okay, down. So Larry and I are going to find good news to talk about later tonight. And later today, when Cern Basher comes out, you'll enjoy his show no matter what. And his stuff that I was just blown away by some of the stats and information that he brought to the table in our conversation yesterday, which we will be covering, of course, around 11 o'clock today. And then, the card for yesterday's Cern Basher video, and it was amazing as we really got into some details about how Tesla stock moves against the S&P, against the NASDAQ, some of the kind of stuff we talk about here every day, but lots of historical perspective. And of course, history doesn't necessarily repeat, but it always rhymes. That's the new meme, right? Okay, that's all I got for you right now. It has been great talking to you.